What's up, everybody? It's Dr. Rail. So I posted a reel tonight on Instagram about just the wins from the week through the options trades that I played. That I've also posted, the plays to the community, in which I've gotten screenshots from people that played as well and have eaten off the plays, which is great. But one thing I've noticed, and it's very common at this point, is that I tend to get the most followers when I post like a reel of my gains. Um, and then I also get a fair amount of followers when I post a reel of option plays. Now I understand, like, people joining or following people because you want to be a part of that, or you want to add that, like a notch on the belt as far as like available plays to you, right? So you're trying to diversify who you're getting information from, which is cool. That is a great reason to follow. But at the same time, those that have been rocking with me, you do, like, y'all know that, like, I keep it 100, right? Like, so my channel, right, and my YouTube and my Instagram it's not solely about like those profits and the gains, even though I understand that that is the ultimate goal in this market, is to make money. However, I try to stress the importance of the psychology behind trading, because that's a part of all of our journey. It's something that we all have to overcome. And it's one thing we all have in common, right? People that have not yet succeeded in the market, the 90% of us, right? So says the statistics, struggle probably with that aspect. Rather, it's the psychology of giving up too soon, the psychology of just not being able to have discipline, the psychology of not being able to read the charts and identify plays, or being too close, right? So the impatience, the impulses, the anxiety, the anxiousness, the fears, the FOMO, the FUD, all of that stuff is part of that psychology piece. And I notice when I post information, or when I post and share like real raw talk, right? Like, I share like the downside, like, of my trading, like what I struggle with, like my mental hurdles, the fact that I'm still on my journey, that I've not yet made it. It is it's common that I don't see as many followers, or get as much engagement or whatever. So I say that to say, be broaden who you follow. Like, I can't give you financial advice because I'm not a financial advisor, but I can, like, make suggestions as far as the content that you're taking in, right? Like, so people, right, follow a lot of traders because they see them winning, and you want those wins, but those wins will always be there, right? I would encourage you to find traders that are that make it their mission to also discuss the psychology of this game, and those traders that actually teach about discipline, and about structure, and about the importance of, like, using stop losses and things of that nature, because those are the guys that have been doing it consistently, and those are the goats that I look up to, right? And my channel, I am essentially just sharing as I go. You see, my light went out. But that's fine, right? Sharing the issues that I go through, right? But all the while, I'm still making money, right? I'm still profiting. So when I have the issues with the discipline aspect of trading, it's not trading holistically. It's parts of trading now. So whereas before, my overall sense of the market was unstable because my mind and how I approached the market was unstable. So what do I mean by that? Well, what I mean is that now, like, I've been trading options for a long time, and I've not been profitable for a long period of time. Like, I've been paying tuition, but this year, right after, I don't know, maybe 4 years of doing it, this year was the first year where, like, the S curve, like, I've gotten over the hump, and now, like, I'm on my way, right? Because I've been consistently making money doing options now. And that's because I time and discipline, and I approach options differently than I did before. So you might say, well, Rel, as far as options trading goes, how did you approach that differently? Well, two things are kind of true. One, I started the incline for options. Now, the problem though is that I still trade very conservatively for the most part, unless it's like a really like high conviction play. I don't play with big money, and that's just a personal thing. And I think the reason why I do that is because I'd be more upset if I were to lose large amount of money versus a smaller amount of money. I don't know. That's just what I am, what it is. So until I decide to put on more risk, my growth won't be exponential. Whereas, right, learning all these years, aka spending the tuition, I did trade small. However, those were compounding losses, right? So essentially, if you lose $500, right, every 2 weeks or every month or whatever it is, like, I think my minimum account was $100 to $500. Just depends on gains and just the situation. But doing that consistently, winning and losing more than you win, right, that adds up, right? So the decline, so the money lost by learning options was a bigger deficit in a faster, like, I guess, plummet versus understanding it and then kind of like on a proper trajectory up. So even though my knowledge and my discipline is better, I'm not making the money any faster, but that's on me. That's because I don't put in more than I'm willing to lose. So it might take me, just playing options, that is, it might take me the duration of the tuition that I pay for me to even break even. But that's on me. And that's my boat. That's my game. That's what I'm comfortable with. But you do you. Okay. So why do I say that I'm still like working on the psychology piece, and that there's like there's two parts to this? Well, the reason for that is because I trade in another space called futures now. But I'll get into that in a little bit. To address the question, or the potential question, of how did I get over the hump with options? Well, that's easy. You have to think about what's consistent in your losses when you were playing options, right? And for me, the consistency was chasing trades and holding on to trades for too long, not using a stop loss properly, having like the anxiousness, the anxiety and stuff like that, having a trigger finger, like just like trying to get in the trade, chasing, whatever. Right. So being in it was my biggest issue, so or being stubborn and like hoping in the market versus using the discipline, right? Using the charts versus my heart. That's what this hoodie used to say, which I got from King and Grace to support him on his journey early on. But it's since faded because, I guess that's just what it is. But KG, if you're watching this, I need another one because, that still resonates. So anyway, so yeah, that's that piece. Like it was those rules that you either didn't establish or chose to ignore that ultimately like was the fate of being a failing trader. But the one thing that I do have that maybe not many of the 90% of traders that don't make it have is the inability to quit. Like I'm just really persistent and I refuse to lose. So I could fail and fail and fail and fail and fail, but I will never quit. So that was another thing, I guess, that what changed for me is like I tried everything, right? I was that trader that hopped into various strategies all the time. And I was that trader that wasn't consistent with how I approached trades, right? So, but it wasn't until I got to a point where I focused more on like larger gains, bigger moves, better entries and stuff like that I start to see an improvement. So what I mean by that is I started to swing trade a little bit more, right? Versus doing the day trades. Now I still did day trades. I am good at day trading. However, by lowering or limiting the amount that I day traded, and being more disciplined to just watch the charts and wait for a setup for a swing trade, that helped me because I was removed from the action, right? The action of buying and selling and buying and selling, right? So by doing that, it slowed me down and allowed me to go at it at a pace that is more comfortable and caused me less anxiety. That paired with the little amount of money that I actually put up on these trades helped significantly because in my mind, if I'm setting up a swing trade, I understand that if it doesn't go my way, that I'm not going to be upset because one, either A, I got a stop loss, or B, if I have a brokerage account that doesn't use stop losses, I'm fully aware of the risk before I enter the play. So that was another thing, right? That's another thing that helped me, or got me over the hump. And this is just options again. And I'll tell you why it's different for different trading platforms or whatever. So I say that to put this message out there for those option traders that are struggling. A couple key points for me to you. Now, again, I'm not some option guru or option millionaire or anything like that. Nowhere near close. Okay, so there's plenty more individuals out there that are way more qualified to speak to trading or whatnot. But people deliver information differently, so I understand why people follow different people. So and essentially where I am on my journey might be more relatable to a lot of you guys, especially if you're a minnow or a dolphin, right? Your orcas probably have it figured out and you're just like, there's a minnow play, but I can put I can buy 100 contracts for a play that costs $50, no problem. So there's money is money. It's all a percentage game, right? So, and a good play is a good play, no matter how you swing it. So, but ultimately that's what it was with the options. Okay. But two things or a couple things for options traders I think that might help you with your journey, okay? And help you win more or lose less, more so than anything, or at least reduce frustrations from trading options. One, before you enter a play, kind of know where you're going, right? That's a given rule. Everybody kind of knows that. You set up where your target is, take profits versus your stop loss. However, what I encourage you to do in that respect, right, is to figure out what the options value will be at a certain take profit and stop loss area. Because when you can identify that, hey, this $50 contract, if it hits $1 or $2 or whatever, right, it'll be worth, let's say that'll be a 70% gain, right? And the value of that contract would be A, right? And if it falls to the stop loss, right, that value of the contract will be B. I would have lost X amount, right? And if you're one of those gambling people that, you still are in the bad habit of moving your stop loss, or you're buying into losing trades, well, by doing this preliminary work, you'll identify what it is you're winning and losing, right? What it is you're really putting on the table to throw away, right? And I think it's just important because right now, especially if you're new to options trades, what you might be doing, right? You might see somebody post an option trade, like let's say me. Like I just put information up on a DraftKings play, which it didn't go well for the most part. Okay, but put the information out on the DraftKings play, and actually this is a good example because someone from the community reached out and explained to me how they kept getting stopped out, and they were kind of just, getting negative. They would get stopped out and they would try to buy back in, and they would get stopped out and buy back in and stopped out. And why, right? Well, the reason for that is because one, either A, the stop loss isn't proper, right? Like either A, you're getting in too late, or B, you're getting in before you have confirmation. But regardless of the fact, right? Where I'm getting at is if you know your numbers, right? If you know what the value of the contract is going to be, you might be a little bit more lenient on or give yourself more cushion on an options trade stop loss versus just going in there and putting in 10%. So oftentimes I see people go in, and I was one of them. I would go into an options play and it's like, I'm not losing more than 10% or 20% of this play, right? And the reality of that is that when that happens, you set your 10% or 20% stop loss and you get stopped out, right? But the play stops you out, then turns around, right? And then what do? Then you're anxious, you got FOMO, so you try to hop back into it, but this time it had ran up and it's clear beyond your stop loss level. So that means that your risk has increased substantially, right? So, but you don't pay attention to that initial stop loss. You think 10 or 20%, and you get stopped out again negative, right? And it's a snowballing effect, and it keeps happening, but you probably haven't identified it. And that's because we're too close, right? So I want you to think about it this way, especially playing options. Look at the structure of the chart. What pattern is the play in, right? Is it in a uptrend where it's showing higher highs and higher lows, right? If so, is the ascending line of resistance being supported, right? Or being respected? And is the ascending line of support being respected? And if the answer is yes, then if you were to get into a play based on a either supply and demand, or let's say support and resistance, then you know that the play is still active for as long as it is within the channel. So your goal then is to get into a position that's closer to the respected lines outside of that uptrend, right? Because the closer you are to those lines, the less risk you're taking on, right? But too often we don't think about it. We're just in too close, and we're just trying to catch the wave. We don't pre-plan. We don't draw our charts up or our lines, whatever. And then we just don't think about it. And you look at options as something that's a detachment of the stock, even though you know it's a direct correlation with, profits and the stock movement. It just feels different, right? It feels different. And hopefully I'm making sense with all of this, guys. But again, if you hop in, using that same example, you hop in to a play and you put it at 10% or 20%. But in reality, that you're going to get stopped out, and then it's going to take off without you. And that's because you didn't give yourself enough room, and you probably didn't understand what the price of the contract would be. So at those levels. So that's why I say, okay, don't just focus on the 20 and 30% rule. Now, if you're day trading and you are trying to do a momentum trade, that's different. A momentum plays all day, I would probably say, yes, let's just, you can do the percentage thing. You just make quick gains though. The moment that you're in green, you're moving your stop loss in the money, right? Or at least to break even, right? So you're not losing on those. Because momentum trades can go against you real quick, especially if you're approaching an area of liquidity. So, and not sure what that is, or, how to find it. So, but yeah. So if you get into a play and it's in an uptrend and you're betting that the stock is going to go up, but it's near the top area of this uptrend, right? Of that ascending line of resistance. And you're not really aware of it because you're so zoomed in. But that pattern is shown on like the 15-minute chart, but you're on the 1-minute chart trying to find an entry. Okay. Well, if you're not sure at that point, then the option play that you get in, you should at least know the dollar amount or dollar value of that contract if you were to lose. So that way you can choose how much you're willing to lose based on a physical dollar amount versus a percentage, because it hits different, right? 30%, right, doesn't sound like a lot, right? I mean, it can for some people, right? 100% loss sounds horrible, but 30%, 20%, it doesn't sound bad. But if you are betting, let's say you're betting $1,000, right? Well, it's 10% of $1,000. $100 wouldn't feel too good to some people. But if you're betting multiple stacks, right, then 10% can be a lot of money. So you have to put an actual dollar value on these contracts before you get into the trade. Okay. I think that's just important. I've gotten to a point where I just understand the price action now, and I look more for better entries. But that's that just comes with time, right? It comes with experience. So knowing when to get in, knowing how much to play, knowing your risk, understanding if it falls to a level you're losing this much, then that's part of the battle, right? But we're not looking at that. We're in it, and we're clicking buy, we're clicking sell, clicking buy, and we're chasing trades, right? And it's $10 here, and it's $20 there, and it's $100 here. But guess what? You're not paying attention to your P&L. You're paying attention to this chart make a move, and you're trying to capture this move, and you're blowing up your account. It happens, and it still happens to me on futures. So, and I will get to that. But that is something that I just wanted to bring to light. If I want to see if this video can get a bunch of likes. I don't know. Can I get 300 likes on this video? And the reason for that is because I want to see if this type of content is important to people. Now, I don't make these videos necessarily for you. Okay. I do this for me because this is a journal of my journey that I get to share with the community. Now, I love helping people. And I think that is another reason why I expose myself and I'm honest brutally with myself and my trading journey. And it's just, why lie? So I guess that was the start of this video because of the Instagram reactions and followers that I got from just posting gains. And I also recently came across somebody that was screenshotting somebody else's wins and claiming it as their own. And people do this in order to get more followers. And I just don't understand it. Like, what are you trying to gain? One, on Instagram, you can't monetize it unless you have your own store. So like, you're not making money on Instagram. YouTube, it's really hard to get monetized. I am almost there. I got 900 more viewing hours to go. So if you guys can watch a couple of my psychological videos, because they are the longer videos, that would definitely help me get to that monetization level, even though that is not my goal in all of this. It's just now an obtainable, a reachable goal is in sight. So now I kind of want to get it, right? And then, so I'll put in a little bit more effort just to get me there, just to say I did it. You know, that's an accomplishment for me. And I just hope I get there. So anyway, I will say this though, the moment I get monetized, I will be passing out or giving away free journals. Okay. I do have my journal here. I made this journal for me. Me and my wife actually put it together based on my personality. And then I made some modifications based on some feedback and my experience with it. And I know it's helped some people. A tool is only as good as you use it, or as good as the wielder that use it. So a journal is not, it is important, but it's not the thing that's going to get you over your hump, in my opinion. I mean, I think it's important to log and journal everything, but you don't need a fancy journal to do that. You can just use a pen and paper or Excel sheet on Microsoft Office or whatever you want. Yeah, whatever suits, fits you. I made one because it's something that fits me. It's catered to me, and I'm a very I like to keep things very simple when things are complicated, because I already make things complicated sometimes. So simplifying things is very important for my mindset and focus. So this video is getting long. So that's my thing with options trades. So if you can slow down, meaning slow down the amount of trading that you're doing, and then focus on a couple key stocks. That was one of my biggest issues. I had about 15 stocks on my list that I would try to trade between, and it's just too much, right? You can literally be fine with three stocks, maybe four, if you really want to. And honestly, that's kind of what I've stuck to. Now, people have wanted me to venture out and talk about other stocks other than the Disney, the AMC, the SoFi, the Chewy, the Roku. You know, I mean, I have my palette of the SPY, you know, like I have my palette of stocks that I'm familiar with, that I've made money with. So therefore, I continue to play those because I'm more familiar with their movement. So familiarize yourself with a stock that you're interested in, right? And has good volatility, right? Or what I'm trying to say, has good volume, right? And it's a controllable trade, like shows patterns, like kind of easy to kind of see a setup for you. And I think if you did that and you just focused on that, and then focus on like key types of trades, rather that's head and shoulders patterns, rather that's supply and demand, rather that's playing support resistances, playing volume profile, given the POC or low volume nodes. There's so many ways to make money in this market, and there's not one way that works, right? It's just a matter of what works for you. And so I have another video that I had shot that I'm just going to reshoot, just to just clean it up and get just more to the point, about a recent kind of light bulb moment for me. Now, light bulb moments doesn't necessarily mean all your trading problems are fixed. However, it does give you some insightful information as far as how something can relate to your trading behaviors. So that aside, now looking at futures, just real quick. Now, I will say that for the futures, for my issues with futures, right? Some of the same problems that I had with options early on is what I'm having with futures. Not necessarily reading the charts, not none of that, but it's more so being too close, and then having stop losses too tight. It's essentially what I'm telling you about option plays. Having stop losses too tight when a play isn't done, like that is respecting the pattern or a trend or what have you, getting in at the wrong time because you're more so trying to catch that momentum. Like you don't want the play to take off without you, but the more you chase it, the further away you get from your what the legit stop loss is. So the problem is that you won't place your stop at that stop loss area because that could be $1,000 loser, right? If you let it fall that far. So instead, what do? You place it at 10 ticks or 15 or 20 ticks, whatever your strategy is so far. But the problem is that that isn't the stop loss. Just because that's the amount of money that you're comfortable with losing doesn't necessarily mean that is that's not the hard line. That is not the stop loss for the actual the stock itself. That's just what you're willing to lose. But the problem with that is that you lose that, and then it kicks you out, and then it starts to go in your direction, and then you hop back in, and then you're further away from your stop loss, what the stop loss should be, and then you get stopped out again on some retracement, and then it's like a vicious cycle. And then you start to size up because you lost some money and you're trying to make the money back, right? And next thing you know, your account's blown. And it's kind of funny when I talk it out because it happens. It happens to me. And what sucks is that I am fully aware of this, you know what I mean? But sometimes, given if it's a bad day, sometimes mentally I'm not clear-minded, right? Which is why if I were to pay attention and use my own journal 100% of the time, you see that there's emojis there, right? Where I supposed to start my day and circle one of those emojis, and then which would is me stating my state of mind before I enter my trading day, right? And if it's anything other than, hey, I'm cool, calm, collected, or money's on my mind, or I'm enthusiastic about getting into the market, if it's anything other than that, then I shouldn't trade. And I'll tell you, every time I trade, when my headspace is off, I fail because it is what it is. I get too close. I get too just the blinders on, right? So the self-awareness piece is so important. Now, that's a me problem. Now, you might have a similar problem, but essentially what I need to do is take my own advice, right? And hopefully you can do better with my advice than I do sometimes. So that being said, this is Stocks for Real. Take care.